Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Scott Melker. He is a crypto trader and investor. He's also the host of the Wolf of All Streets podcast and author of the Wolf Den newsletter. We're going to talk about everything that is going on this week in crypto. And Scott, I'm not quite sure what to do with you. Every time you come on, there's always something going on in the world of crypto. I want to first start with Grayscale. Can Grayscale make its case to the SEC and get a Bitcoin spot ETF passed?
I think that the first part, yes. The second part, probably no. Unfortunately, I think that they can win this case. I think that the judge has been extremely aggressive towards the SEC's stance in the early days. And even Bloomberg, which was effectively saying a 60% chance that the SEC would win, is now saying a 70% chance that Grayscale will win. But winning this case does not necessarily mean that we get a Bitcoin spot ETF. In fact, there's quite a few ways that this could go. It would be effectively saying that the SEC's case for the reason they rejected it is no longer valid. But that means that the SEC would likely be able to reassess and give a different reason to reject the spot ETF. It also could have some collateral damage for the futures ETFs that have already been approved and give the SEC a chance to go back and delist those. Or it could, of course, give the green light to another company other than Grayscale to get an eventual Bitcoin spot ETF, leaving GBTC still to be a trust that's trading at 42% discount to NAV.
Yeah, that would be tough for Grayscale to follow, considering all the work that they've done in this space to get a spot Bitcoin ETF launch. And we're talking about Silvergate Capital, right, announcing it is winding down operations and it's going to liquidate the crypto-friendly bank. What does this mean for crypto? Is this priced in? Is it going to hurt its adoption?
Well, my take is that it's priced in and that the crypto side of it is completely a narrative that has very little to do with the bank actually becoming insolvent. This was yet another example of a bank run with a bank that was poorly managed and they didn't have the liquidity for the bank run that happened. If you look at what actually happened here, they were largely invested in treasuries. And those treasuries were purchased at a time when interest rates were much lower. Absolutely horrible management. So what happened is nobody wants to buy a 1% or 2% yielding bond. So they had to sell them at a tremendous discount to get liquidity because, of course, people can just buy bonds risk-free from the government now for 4 to 5%. So it was just horrible mismanagement. Unfortunately, listen, we were all cheering for Silvergate Bank in the industry. I think they were the first to sort of roll the dice and take a risk on the crypto industry. They banked the likes of Coinbase and Kraken and Circle. And to see all those companies have to desert them in a matter of 24 hours was sort of a sad state of affairs. But the reality is that this is just a bank going under. It's something that's happened hundreds of times in the last 12 or 13 years in the United States. Listen, Credit Suisse is looking like they could be in bankruptcy for a similar type bank run, and nobody's blaming crypto for that.
That's a good point that you make. My question to you is, if the bigger banks shy away from servicing crypto and only a handful of smaller banks step up to the plate, could that insert liquidity risk and concentration risk into the system?
I think that it's certainly possible. We've seen some great thinkers in the crypto space like Nick Carter liken this to a previous Operation Chokehold when we've seen the banking industry effectively cut off from different industries. And that's something that people have been talking about for quite a while. I had Caitlin Long, obviously the CEO of Custodia Bank, who recently had their Fed master license rejected, master account, excuse me. And she told me last April that she thought that the biggest point of failure or the biggest attack vector for the crypto industry would be through the banking industry, that sort of looking at the SEC and CFTC as misdirection when we should be paying attention to the Fed and the FDIC, the bank regulators, the big boys, so to speak. So if Silvergate is somehow used for the narrative to push back against the crypto industry, it could make bigger banks shy away, and it could become problematic in theory for the industry to be banked, which trickling down to retail, I don't really think this will happen, but the worst case scenario would be that you can do whatever you want in the crypto industry, but you can never get your fiat in and out. That would be highly problematic.
Explain to us what's happening with Amazon and NFTs. Is that something that's positive for the space?
I think it's interesting. Listen, it's I think that we need to abstract away all the crypto language, the blockchain technology language, and certainly the term NFT eventually, where this all just becomes digital art and normal things that we transact in, buy and sell. But Amazon obviously is the biggest player in the retail sales space. So having them make a commitment to the NFT space, allowing you to interact with these NFTs strictly with your credit card and bank account, your normal payment rails, as opposed to having to open a MetaMask wallet or buy Ethereum and use that to trade like you might have to on an OpenSea or crypto native platform. I think all of that is sort of, as I said, abstracting away the complexity and making it much more accessible to retail and to the mainstream. You can't be unhappy when you hear someone like Amazon coming in and offering an NFT marketplace.
Yeah, Scott, I would agree with you because we have seen brands, particularly higher end luxury brands, adopting some NFT technology and using it as a way for immersive experiences and special shopping experiences and so forth. But when you see something like an Amazon, like my mom and dad shop on Amazon, it'll help them be able to digest that. And that's really, I mean, we were talking about Starbucks and their adoption of a similar strategy. But when you open up to Amazon, you know, and then if you see like a Walmart and a Target and then, you know, everyone else adopt it on the big box space, I mean, this could change the landscape.
I think it massively changes the landscape. And, you know, much to the sort of, I guess, despair of Bitcoiners and Bitcoin maxis, it's not like the past cycles where people came in through Bitcoin, they understood the reason for it, that it was a hedge against the system, et cetera. Now we're seeing mainstream adoption come from sort of the ancillary parts of the crypto industry, like NFTs, in the future, maybe the metaverse and things like that. But to me, it's all a good thing. I think all roads lead back to Bitcoin one way or another, and getting any sort of mainstream adoption and that stamp of approval, especially from a company like Amazon, is massive.
Right, and Scott, you and I have spoken about this a number of times over the years. Yes, everybody wants mass adoption, but with that comes institutional management, and there are different ways that they manage their risk versus retail investors. So perhaps things will be a little bit more range bound, and we won't see those massive runs, and hopefully, you know, not taking the elevator down either for that reason, because there are institutional risk controls in place. It's kind of like you're a victim of your own success sometimes.
I think that's absolutely true. We've talked about the fact, as you said, that you have to be careful what you wish for. We wanted Wall Street to be here and institutional adoption. And what we got was Wall Street being able to aggressively short this asset and to have liquidity on a Saturday at 3 p.m. when they couldn't sell their stocks and needed something to sell, they could sell their Bitcoin. But I think that now it's really encouraging to see these retail focused plays in the crypto space really starting to gain steam, because that's where the true adoption will come from. And I think that that will marginalize the institutional side. And let's be frank, I think they're a little less interested at this moment anyways, but that will marginalize them and give us a better balance of who's actually controlling the money that's coming into this asset class.
All right, great points as always, Scott. Appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.